I want to welcome you to the continuation of the leases. This time we're going to cover the finance leases, and we're going to start with the lessee, and then if I have time on this one, I'll go to the lessor. Sometimes the lessor is also called a sales type lease with no profit. So it's the same type of thing. So it's going to use the same chart. That's why I thought it'd go on. And on this example, back up. I want to welcome everyone to the continuation on the leases. On this one, I'm going to cover the finance leasing, and it's for the finance leases is for the lessee totally. Sometimes it's called for the lessor as well, but other places may call it the sales type lease with no profit. And we'll get into that a little bit later, what the profit is. It's no profit on the sale of the asset itself, actually. But this is going to be for the lessee to start with, and if I have time, I'll switch over to the lessor because it's the same chart and the same calculations. So what we have on this is a 4-year lease, four-year term. Life of the assets 4 years. The payments will be $208,333 because those a lot of times will be given to us, and the cost of the asset is $726,426. So it's very similar to the operating lease that we just covered. This is how I calculated the value of the lease. I'll double click it so you can see it a little bit. It's equal round again, and it's the present value, and it's of the interest, which is the 10%, and the B2 is the 4 years for the lease, and the payment was a negative $208,333, and it's done at the beginning of the year, and again I rounded to 0 decimals. So you can see it's 100%, so it's a capital lease, and this is 100%, so it's a capital lease. So the beginning balance would be the $726,426, just like we had there. And the first lease payment is the same payment all the way through. So let's F4 that. So it's $208,333. Okay. And on the first one, since it's done at the beginning of the lease, it's the same amount. And then we'll subtract them, the 726 by the 208. So it's 518,093 is the balance. And then we'll calculate the interest. So it's equal round the 518 times our 10%, comma 0. Because we want 0 decimals, and I also want to make sure I absolute value that number. Okay, and then we'll take the 208,333 minus the 51,809, and then the 518,093 minus the 156, and this is to fill out our chart. I like using charts because it makes life easier. See, we're off $1. So for this, we need to, I think it's add $1 because it's negative. So that's the way it comes up to 0. And that's because of rounding. So you don't worry too much about that. That's just an adjustment because of rounding. So it was off $1. Okay. Now for the books, this is the lessee's books. Get another S in there. Okay, the lessee's books. The right of use asset is for the $726,426, and the liability of the lease is $726,426. And then for the first one, lease payable is going to be reduced by $208,333, which is our first payment, and that's the cash that goes out. Okay. Then on 12/31 of 20, which is the end of the year, we'd go to the second one. For the lease payment now is the $156,524. And that's why I said these charts make life a lot easier for you because everything's already calculated out. You don't have to try to remember where you're at. So you just bring them in. Okay. Now the amortization expense for this one. Okay. So we look at the amortization expense. Because this is like a sale, we now have the asset is a capital lease, so we have to amortize the right to use. And it's kind of like we did before. It's going to be the $726,426 divided by 4. And before I get carried away here, I want to do the round function. Okay, divided by 4, comma 0, because there's no salvage value, so it's 181,607. Okay, because that'll take it down to 0 by the time we get done at the end of 4 years. So it's the basically again it's the 726. Well, it's the 726,426, the right to use asset divided by the useful life. We don't have a salvage. So then we go to the next one. So the lease payable is 172. This one is going to be 36,157. And the cash is a 208,333. And the amortization expense is going to be exactly the same we had before, 181,067. Okay, so that's because you calculate the same way, 726,426 divided by 4, because it's a 4-year life, 4-year term. Okay. Then we'll have on 2022 for December, doing lease payable, interest expense, and the payment. Okay. And then we have the amortization expense, which again is the 726,426 divided by 4. And you do that the following year also. Now notice this year we don't have a payment because it's done at the beginning of the year. So at the end of the year we don't have a payment. Okay. And what I did down here was to kind of prove this out. Okay. I had the cost of the asset, the rights to use asset was that. And then on 12/31 of 20, I had this one. And on 21, I had 181,607. On 22, 181,607. And on the last one. So then what we had is come up with our balance. We'd have this minus what we subtracted off. And if we copy it down, you notice the last year, we have a $2 balance, and that's because of rounding. So there again, we don't worry too much about it. Because I think it's actually 50 cents is what it comes to. And that's why it's off $2. So if you wanted to, you would adjust this, subtract off $2, and that gives you a 0 balance. So if you did this, you say minus 2, and that would be the same total, and that would give you then, whoops. What did I do there? Oh, that's because I took off $2 there too. Can't do it both places, can we? There we go. Okay, that gives you a 0 balance in, and that's because of rounding, because this actually came up to 50 cents. I do remember that much. Okay, but that's the lessee. Okay, so nothing too fancy. You do the chart, and notice we don't have any residual value. We don't have any guaranteed residuals or anything like this. So we don't have to worry about it. No bargain purchase options. So it's just pretty straightforward. Find the present value of the lease payments, and then you amortize. You put it down, and you put the payments and do your calculations to find it. Now, the other thing we want to do then is, I think, yeah, I have time. We go to the lessor, which is the same chart. I'll bring it up a little bit. Okay, and I'm going to change that to comma 0, which I forgot to do. So it's the same, exact same chart. Again, it's no 4 years. It's the same set of numbers. So the chart here is going to be the same. So it won't take too much explanation. Yeah, because it should. We could actually use this same chart we did here. 726,426. It's going to be the same. This is the lessors though with no profit. So we have the payments are this amount here, and it's the same all the way through. So that's not going to change. And this one is this minus the interest revenue, which we don't have any. And then we take the 726 minus the 208. Again, I'm quickly going through the chart here. Equal, round. We take the 518 times the 10%, absolute value that, comma 0 because we don't want any decimals. Okay. And then we take the 208. No, we don't. We take the 208, 333 minus the 518. Okay. And then we'll see what our balance is with 518 minus the 156. Okay, and then we copy this down. And again, we should be off $2 again, off $1. Okay, so we add $1 to that, and that takes care of that. Okay, and again, that's because of rounding type of things, what that is. All right, but this is our chart for the less. If you notice, it's the same chart we had for this one over here, 189,393, 18,940, because it's the same set of numbers. Okay, so we don't have to change. We could just do it one time, just do the one chart. But this time, it's a little different. This is a sales type lease with no profit, because what the company did was buy the equipment to lease it out to somebody. They didn't build it. So the lease receivable is the 726. I hit the wrong button. Okay, it's the 726. Equipment is the cost of the equipment, which is the same dollar amount, 726. Okay, and the first payment, we get, this is the cash here, and this is the reduction in the lease receivable, because the payments are at the beginning of the year. Okay, so now down here, what we would have would be equal against the cash, and then the lease receivables, the 156. And 51,809. And for this 22, it's the one, so this is the cash over here, getting the 22. And lease receivables 189, and interest is okay. And then the 20, did I get the wrong ones? 28333, let's see, that's the first one. Oh, this was supposed to be the second one, wasn't it? Okay, I got on the wrong line. Well, that's going to be right. 20833. This one is the, I haven't done the 156, have I? And the one, okay, there's that one. This one is the 172. And the 36, there we go, I got in the wrong one, sorry. And that's one thing you get bad about this, you get in the wrong chart. But the charts do make life a lot easier for you, because you just simply have to, everything's figured out. You don't have to see what the balances are. Okay, so that's how you calculate that's the lessor. Okay, so you do the chart the same way, the 726, and then the 10% of the outstanding balance. And like I said, and round it how the book wants it, or however you're doing it. I go 0 decimals, so that's what most textbooks want. I usually go 2 by accident. That's why I had to change everything. But the first, for the lessee, for the lessor, you have to get rid of the equipment off the books. And so the lease receivable and the equipment should be the same dollar amount. That's what you're accounting for. Then you have the cash that you received. And then you just go through the chart. This is the cash payments here. This is your lease receivable decrease. And this is the interest revenue you record. And if you notice, it's also the exact same numbers we had on the lessee's books. The difference is, and that's why I have interest revenue expense, because sometimes I use them for the same chart. Makes life a little bit easier to do. But that's how you do this one. It's done the same way. This is the lessor's books with no profit. Also sometimes called a financing lease. Sometimes it's called a sales type lease with no profit. Okay, so thank you for this one, and then we'll see you on the next video.